Good morning, and thanks for joining us here on Treasure Coast Solutions. Every Wednesday from 9 to 10 o'clock, we talk about some of the economic issues and financial issues that may impact you here in Stewart or in your daily life. Some of the issues that you might want to be aware of and some of the things you might want to look at. We're not a financial planning show, so I'm not going to help you with your retirement dollars other than say congratulations that you've got some, if you've got some. The purpose is really just to talk about some of the things that happen every day around the world, whether it's overseas or here in the United States or locally in Stewart or Martin County. Some of the things that might impact your daily tasks, your daily trip through life, and maybe make it either easier or harder, or at least give you some idea of what might be coming down the pike. My name is Mark Breckbill. I'm a CPA and have been had my own firm here in town for 25 years, and was previously a banker for about 13 years or so, maybe a little more than that, and had been chief financial officer of a relatively large bank, about a $600 million bank, which doesn't sound very big anymore when you talk billions and trillions, but used to be in those days. And also have started some banks and done some things there. So a little bit of finance background and accounting background and some economic background, most of that being in the banking industry and, of course, in college. But and then also I have, had an opportunity to work in a couple other areas and with some small businesses, and I have a small business of my own. So you get to see what's going on out there. And it helps. It gives me a different perspective, I think, sometimes on when I'm helping my clients than the typical CPA maybe that hasn't had those experiences. But one of the things that I wanted to talk about today is what's going on right now with and I'm going to start with international, and and I guess what I'm kind of leading up to is what I see coming down the road in terms of issues that you may want to be aware of. And so, because what do they refer to economics as I think it's called the dismal science. Is that what it is? Anyway, it is pretty dismal when you start looking at some of these things because mostly just is projecting bad things, and hardly sometimes it's projecting good things, but it seems like a lot of times everything is all pointed out to focus on the negative. But that's probably the way things should be. When things are going good, leave it alone. you know don't mess with a good thing. But when things are going bad, you look at it to find out how bad is it going to get, how long is it going to stay bad, and how do we get out of bad? Is there a way to get out of bad? Sometimes the answer is to just not get in the way and get out of the way. That's at least, especially from the government standpoint. Sometimes government can exacerbate the problem, but let's talk about what's going on. We've worldwide, the difference that I think we have right now economically going into this depression is that we were the dominant factor in the world in everything, and we produced our own stuff. We were the major consumer of our own stuff, and that was kind of the way it was back in 29 and 30 and 31 and in those eras. And so we could control, our government could control more. We had more control over prices. We had more control over the use of facilities. The government could take things over and convert businesses and it would change everything, because those businesses were the only ones producing planes, for example, or only ones producing cars. And so at that point, you didn't have any kind of it didn't cause any kind of economic disparity within the U.S. other than the disparity that was already being created. So say, for example, you decided to convert a couple auto plants up in Michigan to military use. It it naturally had an impact on gross domestic product, and it had an impact on the economy in the U.S. But the economy in the U.S. was already being uh, stimulated, so to speak, by the war. People don't realize that, but the war solved the Great Depression. It took that long, and frankly, it was not what was done by Roosevelt after the crash. It wasn't, and it certainly wasn't done by any of the other people prior to the crash. With but it was Roosevelt did manage to keep people working, and he was smart enough to keep people working on infrastructure jobs, which created future use and future value instead of just sending somebody a check to do nothing. That would have been much more devastating. But but if you look at it, the unemployment didn't go away until we reached full unemployment in in the early 40s. So, and that was because of the war. And then uh, and then if you look at that time frame, because that really was how we got out of a depression, and there was an economic there was an economic aspect of the depression, uh, and there was an unemployment, of course, which is also economic, but an unemployment aspect of the recession, and then there were other aspects of it. There were political and military, but so uh, basically, what happened is that Roosevelt came in and tried to, with faced with 25% unemployment, food lines, and a lot of other things, had to find a way to get people money. In those days, I guess you'd call him a conservative. He didn't want to give people money because he didn't think that would have any value. He wanted them to work. So he just would put them to work by the government and pay using the government to do that. Now, you'd say, well, how does the government have any money? It's in the midst of a recession or depression. Nobody's paying any taxes. And that's true. And they didn't. They did it by something called Keynesian economics, which is you're hearing surface today. And what that was a concept that, in effect, the government could print its way out of a recession or depression. That the best way to get out of a problem like that was to create additional money that would then create a, a transfer, theoretically, from uh, from the government to the people. But in reality, what it was a borrowing against future tax revenues uh, in exchange for giving the existing people that money. Now, if the people who are paying back that through tax revenues are the same people, then it'd be the same thing as if the individual went out and borrowed money and did that, and then just was going to pay it back themselves. Uh, the fact that Roosevelt created work in some cases, and did a lot of construction and a lot of make work type stuff, but that had some infrastructure uh, benefit. He then, in effect, used some of those dollars to spend it on something that would produce a return that would not just have to be paid back. So it's kind of like the situation that if I'm out of work and I go out and was able to, which I wouldn't be able to, but let's say I was able to go out and borrow $200,000. If I took the $200,000 and I put it in my pocket, um, now I'm buying food and stuff like that, so I'm ultimately transferring it to other people's pockets at the same time. That's filtering through the economy and creating uh, other sources of revenue for some people, or getting them some funding. like the grocery stores and the government's getting, trying to get the food out there, and the farmers and everything else trying to get the food created. But so if I did that and I spend it and then there's nothing to show for it, other than I'm still alive, which I guess is a good thing. Uh, that's one thing. But and then I got to pay it back. So really what I did is I borrowed from my future to pay for my present. Um, and that could be a good thing. And, it may make a lot of sense. Some of us that have been out of work have done that. We borrowed in the present to be able to survive. And then we've, ended up having to pay that back later. Somebody who's been through that knows how much of a struggle that is to pay that back later. That number becomes harder and harder to get paid out, because it kind of drags you on for a long period of time. It has interest associated with it, and just keeps going. And so it has other impacts. And frankly, it affects your ability to do certain things. If that debt is too large, if it's too cumbersome, if the interest rate is too high, it means that your current situation changes. You may not be able to take a certain job because it doesn't pay enough to pay that back. You may have to change what you do entirely because there is no future in that particular job, and now you have retraining costs, and so now you may have to continue to reborrow again down the road as you try to get through all of this. You've got issues with other things. If you've got more debt, other costs go up. Your cost to buy insurance, your cost to on credit cards or whatever else, all that stuff goes up. So when you buy to stay alive, and that's really the reason you would do it, you have to you have to realize that it's very, very hard to pay it back. Now, if I borrowed that same $200,000 and bought a house with it, for example, um, so I didn't have to pay rent, and I still have to find a way to survive. I still have to find a way to get food, but I've at least handled the housing situation. But instead of renting it from someone, let's say I spent that money, or most of it, and bought my own place, right? Well, if I paid cash for it, I'm paying on this debt now. But at least in that case, that investment that I made was not, it was not dissipated right away at the time I made it. It's still there, and presuming that the economy and real estate comes back, and that, then my 200,000 may not be that bad to deal with. I may be able to, in effect, I still borrowed against the future because the property went up in value, and I'm going to have to take that value and probably use it to pay off the interest and debt and all of those kind of things. But at least I got some of my money back. Even some of the money I spent on food, I recouped it by investing those dollars instead of spending those dollars. Uh, that's kind of the government. That's the way the government works. If the government gives you a bunch of money, whether it's PPP loans that they forgive, or and let's talk about that a little bit too, because the type of debt makes a difference. But let's say the government gives you a stimulus check and you go out and spend it, right? That all you did was one of two things. You either borrowed from yourself, because when the economy recovers, you're going to go back and hopefully get a job and making the same kind of money you were making before, but you're going to pay higher taxes because somebody's got to pay for all the money that went out. I mean, nobody gets a free lunch. That just isn't the way it works. There is no, I'll say this, I've said it before, government does not create income. It does not produce income. It does not create income. It cannot and does not create any economic value. It only transfers wealth, and wealth is a loose term. I'm not talking about rich people. I'm talking about income being part of wealth. It transfers wealth from one person to another person to accomplish something. In that transfer process, somebody wins and somebody loses. The government does not win. The government doesn't get more. They just transfer. All right. Now, to the extent that it takes thousands and thousands of people to manage that process and all kinds of departments and equipment, it has a significant cost. So the government not only doesn't manufacture anything and wealth wise, it also is a significant cost factor and can be an extremely expensive way to transfer wealth from one person to another. The easiest way to transfer wealth is for me, if I was wealthy, to give it to somebody else that I know. Don't send it to the government. Don't send it to the federal government as taxes. Don't send it to the state government. Don't send the unemployment there. Don't send any of that. Instead, what I would do is I'd say, oh, this person right here, I know needs money. They're having a hard time. Their family's having a hard time. I'm going to give them some because right now they need it. Or I'm going to go and I'm going to go and take and talk to some people here right locally here, and we're all going to chip in to help that person out. Well, that's kind of, and that's the most effective way to transfer, as far as cost effective, because there's nobody involved but me. So it's me and the person that I want to help. That's real easy. No labor. I don't have to pay the Washington. I don't have to pay for the IRS. I don't have to pay for this Florida Department of Revenue. I don't have to pay for any of that stuff. And so now that's what they're doing. They're doing the same thing I'm doing. They're just finding different people, but they're doing the same thing I'm doing, transferring it to somebody else. They're just taking their cut out from a cost standpoint because they have to get paid to do that. So, ultimately it becomes a less efficient way to transfer. It's true. That's why the PPP loan, the way it was structured, a lot of people didn't realize this. Its sole purpose is really to transfer money directly from the government to the employer and the employer to the employee, bypassing all of the normal routes. In other words, they could have done it through tax credits. They could have done it through stimulus, which they did some of that. But that is an inefficient way because it takes a long time to figure out who should get the money and where it's supposed to go. As many people know, some people haven't received their stimulus yet because they didn't have a bank account on file. And so now that got held up, or it went to the wrong bank account, or now it's got to be a check issued. So, or they made too much money or whatever. So the PPP was very efficient. You went to your local bank. You didn't actually go to the government. You went to your local bank. You gave them some information. They gave you money, and you gave it to your employees. It's pretty straightforward. Not a lot of costs involved there. There was the cost was really the guarantee and the government money that was put up, and so it had a high cost from a cost of the program standpoint. I don't mean that, but the administrative costs were fairly small because the mechanism already existed. The SBA 7A loan already had been around for years and years. And, so the mechanism to do it, everybody knew what they were doing, and it was fairly efficient. It was more of a free enterprise transfer, a lot less costs involved. The more regulated a transaction is, and the further from a free market type transaction, typically the more waste is in it. The one good thing that a capitalistic system does is people always think it's all about prices and wealth. It's not that either. It's a capitalistic system produces a more efficient economy because waste is automatically eliminated because there's no money to pay for waste. So what happens is that the transaction costs are reduced to a minimum to get the transaction done because nobody's willing to pay those costs. Nobody's willing to pay for that inefficiency. So in an efficient market and an efficient capitalistic market, the transfer of goods and services and the funds to pay for those, but the transfers of goods and services among people is done at the people level as quickly and as easily as possible with very little costs from a transaction standpoint, because nobody wants to pay those costs, and they have other choices. If there's going to be a cost doing it this way, I will do it this way. There's no cost, so the market gravitates to the most cost-effective method of transferring goods and services. So ultimately, what we're looking at here is, I was kind of digressing a little bit because I want to talk about the PPP. Is the PPP was a relatively efficient way to transfer services, and what it was the ability, presumably, to be able to get money out there very quickly. Now, what has kind of mucked everything up is nobody, although they should have, nobody took into consideration that when the government is involved, it is automatically inefficient. When you have to run a transaction through a bureaucracy, or it starts from a bureaucracy. Now, keep in mind, really what the government was doing is they were not giving us money. So it didn't start with the federal government. What it started with was your tax check that you had, your taxes that were withheld from your pay. The government already had that money or was expecting it to come in. So all they're planning on doing was giving you that tax dollars. Now, there wasn't going to be enough this year to cover that by any means. So they decided that they were going to give you the next 10 or 15 years tax revenue. So that's what they did. They gave you your withholding from the next 15 years, and it's going to get higher, trust me, is going to go to that for that purpose. Speaking, well, it's funny because one of the things that I believe it was Roosevelt did during the Depression, and I don't remember. So if somebody knows for sure, please give us a call, 220-9788-220-WSU. I believe it was Roosevelt that changed, now it might have been Johnson, but in the midst of these social programs that were being done, the government changed the method of collecting taxes. It used to be you filed your tax return and paid your taxes. And somebody, like I said, it was either Roosevelt or Johnson, came up with the idea that if I can make you pay your taxes in advance, it is less costly to the government. In other words, the government can get your money sooner. They're making you pay taxes that you don't have to pay. And so it doesn't cost them any debt cost, any carry cost. In other words, right now, let's say they're collecting they've given you your next 15 years worth of tax deductions. Well, they got to still borrow the money because they don't have it. They're going to have to wait to get those 15 years. But if they could give you this money right now and then turn around and say, you're gonna have to pay that back on next year's tax return. And by the way, you got to make estimated payments of those taxes now in anticipation of when you file your return next April 15th, which is what the government does, by the way. They get your money in advance. But that saved millions and millions of dollars in interest. And so, and it technically didn't impact anything from a cost standpoint. All it did was cost the consumer because they had to give up their dollars earlier. And the borrowing capacity or the borrowing costs were eliminated, and or a large portion of borrowing costs were eliminated. So, if, for example, the government could come out and say, if they came out and said, we're not going to change your tax brackets at all, but you have to prepay all your taxes in advance, a year in advance. So on this year's tax return, you have to take an amount equal to next year's projected taxes, and you have to not send it in on a quarterly basis, but send it in right now. So when you file your tax return this year, let's say, the government could say, you have to pay whatever taxes you owe for this year, and you have to pay the taxes that you're expected to owe for next year, and you have to pay them right now. That would save the federal government millions and millions of dollars, and it would cost the taxpayer millions and millions of dollars without them knowing it. without them really being aware, because they didn't increase taxes. A politician could look you in the face and say, I'm not increasing your taxes. Your taxes are exactly the same. It was changing when you're paying them. It's nothing's different. Nothing's different. Well, that's a huge difference. But uh, but that's how governments do things. It's a sleight of hand. The one of the one of the ways that they can solve this depression issue is to avoid it. How do you avoid a depression? There's and and let me say, there's a couple different ways to get rid of a depression. um, but a depression is not a bad thing. A depression in a capitalistic system is a necessary thing. And you say, you got to be kidding. That's crazy. Nope, it's not. It's absolutely true. In a capitalistic system, over time, because of interference, because of monopolies and markets that have changed, and have become uh, not a free market, over a period of time, capitalistic markets become inefficient. Um, and it's because of their success they become inefficient. So, for example, you know, if you look at a company like Facebook or Amazon or whatever we want to talk about, some of these big companies, when they started out, they were not a monopoly. They were out there, and they needed the consumer, and they needed capital, and there was a lot of competition for the capital that it took to run their business, and very little. And so there was, so they struggled. They struggled, but at some point, same thing with Microsoft. When they were so successful that they became the only dominant product, that their product became so much in demand that people would virtually pay anything for it, or had to pay anything for it because it was included in what they were buying, they became a monopoly. Their market was no longer efficient. So the market for operating systems for computers became an inefficient market, which meant that we all paid more than we should have, because there was no competition. So he didn't have to reduce his price. Gates didn't have to reduce his price. He became a billionaire as a result of it. Is that a problem? No. I mean, that's fine. He put everything on the line. He worked hard. He was successful. But in a capitalistic system, we have to have it so that he's not protected from competition in the future, because otherwise he will continue to reap not only the reward that he was entitled to, but a much greater reward, because he'll be able to charge a much higher price. Now, those kind of inefficiencies occur in the market over a period of time. They constantly happen because innovation drives results, and results produce profits to people, and in some cases a monopoly, because it is the only thing. It is such a good product that it's the only thing anybody's willing to buy, and unless you can create some sort of equilibrium, some sort of level playing field. All right, but that doesn't, most of the time it doesn't happen. Politicians protect businesses because they say they're a free market. We can't interfere with that business. We can't control that business. We did it with the banks. We said they're too big to fail. We can't do that. They're too big to fail. So we can't restructure. So what happens is the government, in its inefficiencies, and sometimes the intent is good. For example, the Obama administration was faced with a horrendous economic outlook when he took office. The market, the economy was tanked, and or was tanking, and he was trying to figure out what to do, and how to fix it, right? So what he did through his administration is stepped in and tried to keep the economy from collapsing. He tried to keep it from being a depression. And and the difference between a depression and a recession is that a recession is is a controlled depression. That's what it is. A recession is a controlled depression where the government, or sometimes others, but generally when the government steps in and tries to stop something from happening, tries to stop the depression from happening. And so what happens is that it creates it creates a, a calculated response, not a uh, not an uncalculated total adjustment, which is what a depression does. So a recession is really just a uncontrolled, in effect, depression. It's a depression that is tried to be stopped by the government. So what I was getting at is that I was saying that a depression itself is a good thing because at some point the economy, a free market, has gotten messed up to the point that it is no longer. It's controlled by either large corporations, government, whatever, or not controlled, but they've mixed into the market so much that everything is inefficient. Everything is resources aren't transferred to the parties that need them in the manner that they need them. They're controlled, reallocated, and transferred to the party to someone else arbitrarily based on government's perception of where they should go. A depression fixes all of that. When we have a depression, everything collapses. Everything goes bad. Jobs, or any job that isn't necessary, is gone because a bunch of jobs that are necessary are gone. And so what happens is when the depression clears out, but what it does do is it clears out the weak performers first, the weak industries first, and it gets rid of them. And those that have been protected, like the banking industry, go away. Those banks leave and new banks come about. Unless the government steps in and tries to create some sort of an arbitrary banking system, which then will just exacerbate, it'll not, the depression will have gone to waste. I've heard some politicians say we should never let a good crisis go to waste. From an economic standpoint, you should never let a good depression go to waste. Depressions are what make the United States and a capitalistic system the successful system that it is. It's the correcting mechanism. It's the governor that keeps it from just totally blowing apart. It is what keeps us as a free market system and the most efficient and most powerful economic engine in the world. Because of that, it is recessions that cause just the opposite. They're the ones that cause inequities that make the market less efficient. We are paying for the success, and I'm using that in air quotes. We are paying for the success of the Obama recession, which, again, I don't blame him. I mean, he's trying to figure out what to do. What he should have done is let a bunch of people fail. But that's hard to do as a president. You're going to have a pretty bad rap from a history standpoint if you're the person. It's funny. Historically, we tend to reward in history the people who got us out of the recession or out of the depression, which really wasn't what many of them, like Roosevelt. He's given credit for all of the great things that he did to keep people from dying, and he was a fantastic, and how he saved everybody and what he did and how he did it, and actually when you look at it economically, it was a disaster. I mean, he borrowed from the future to pay the present. He adjusted some industry and kept some people in business that he shouldn't have in the process because he tried to correct the depression before it was finished. That's why we had people think of the crash of 29. There was a crash in 29. There was also a crash in 32 and 33. So, and what was the 32 and 33 crash? That was the stuff that Roosevelt protected. That was primarily the banking system. Why do you think we have the Glass-Steagall Act, or had it? It was because of 32 and 33. The Glass-Steagall is the Securities and Exchange Act of 33 and 34. Why do you think we have that? Because the president tried to save those guys, and it created a disaster. And so the that act segregated those, so it created a competition in an industry that wasn't there before. What was happening is the banks controlled investment banking, they controlled company sales. So a bank in those days had they had become so powerful because they became an engine of manufacturing and of the large robber barons. They became the way to finance what they were doing. They were there for the wealthy. They controlled who owned what businesses. They became the problem with the economy, not the solution to the economy. They became the problem with the economy because they and a handful of people, and this wasn't the government necessarily, this was a handful of people, were controlling this, who had the opportunity to make money, who had the opportunity to own a business, who had the opportunity to create wealth, and who didn't. And that was held in a handful of people that were that powerful, because wealth by that stage had been concentrated in a very, very small group of people. The Depression was, in effect, the mechanism that made an attempt to correct that. The administration stepped in and tried to affect that. At first they did nothing. Then they tried to come in and correct it. The doing nothing helped until they came in and tried to correct it. And then because they figured they could keep they could help people, they could keep the crash from being as great. And we had a second crash, basically. So from an economic standpoint, a depression is a good thing. From a and so people talking about, oh yeah, you're just trying to help business by avoiding a depression and the financial collapse. All you're worried about is money. That's not it at all. Actually, if you were only worried about money, you would be cheering on the recession that's looming on the horizon. No, what you're concerned about, and what Roosevelt was concerned about, was that when that many people are affected, which is what happens with the Depression, 25% unemployment, when that many people are affected by a loss of their job or their income immediately, it creates death. It creates physical problems. It creates health problems. It creates just a nightmare of a result. It's amazing to me, with all the history we have of depressions and in the United States and the recoveries of them, that we still have people out there trying to tell us that this coronavirus reaction is a choice between lives and money. No, it's a choice between lives and more lives. Because look at the numbers. Take the numbers from 1930, 1931, 1932. Take those numbers that are suicides, drug overdoses, deaths, murders, and extrapolate those to today's numbers of population, and you'll see the millions of people we will lose. Yeah, and I'll give you, people will say all the time, oh, yeah, you just make that stuff up. That doesn't happen. Well, first of all, statistically it does. And you can go back, if you're a numbers guy like me, you can go back and look at the statistics, and it does happen. It did happen. But let's think about it logically. It makes sense. If I'm out there and I have no income and I'm trying to protect my family, I'm a mom, single mom with kids, and I've got to feed them. I am a mother and father trying to take care of my, trying to keep a place to live, a shelter. I might be a young couple that I've just started getting my job and I don't have a bunch of money put aside. I'm not wealthy. Now, I'm going to do whatever I can do. If I see somebody's got something laying in their yard, there's some food over there, there's something they've left there that I could take and I can help provide some food to my family, I'm going to go try to get it. I'm going to do what I can do. Even if my life is in jeopardy, I'm going to put my life in jeopardy for my family. Well, if I'm on the other side of that and I'm trying to do the same thing and I have some food in my house that I've managed to somehow get, and now some neighbor of mine is trying to come into my house to take my food away from my family, I'm going to defend myself. I'm going to put my life at risk. When you have people on both sides of that equation that are putting their lives at risk, people get shot, people get killed, people die. When you have people who don't have money for food, they don't spend money on doctors. They don't spend money on medicines. They don't spend it on any of those things. They spend it on food. There's a psychological concept called Maslow's hierarchy of needs. And it's kind of interesting, and I use it in the investment area some. But basically, Maslow was a psychiatrist, a psychologist that looked at how people think and react. And what he learned is that people have a base need: housing, food, shelter, uh, those type of things. They have a base level of needs, and until those base level of needs are met, they aren't interested in anything else above that. They're not interested in the luxuries. They're not interested in anything else. They are only interested in those base level of needs. Once they've satisfied those base level of needs, giving them more money towards those base level of needs doesn't do anything. It doesn't motivate them. They then have moved on to the next level. Once they've made sure that bottom of the pyramid, that base level of need is met, they move on to the next level and then the next level. And so when we have a situation like this where people are below the base level of needs, they can't provide housing, they can't provide food for themselves and their family, then they do whatever is necessary to get that level covered. That's all they focus on, and it becomes their priority. So if you have to steal to do that, you steal. Now, if you're trying to protect your food and protect yourself, and somebody tries to steal from you, you shoot them. I mean, isn't that what really happens? I mean, that's kind of blunt, but that's what happens, right? I mean, I'm trying to get food, and that's what we have that all the time. We have it in poor communities all over the United States where all somebody is trying to do is feed their family, and somebody else is trying to protect that. Now, some of that is also driven by the second thing that happens in a recession. People turn to drugs for a release, to get out of it so that they can mentally get away from the depression, the feelings of despair that they have. So they take drugs, and they take more drugs, and then they need money to take the drugs because it's the only thing that then they can get out of. They're now only focused on the drugs because the drugs replace the food and the clothing and all of that kind of stuff. They're just concerned about drugs. So all of these things create massive amounts of deaths because it creates massive amounts of crime, massive amounts of suicides, massive amounts of undiagnosed illnesses. So I'll give you. So I said, that's kind of just an overview. You look at that and say, but I'll give you specifics. During this coronavirus, my people, almost all my audit people, work at home, but the problem has been that many of their clients that we're doing the audits on, we can't get stuff from them because they're kind of locked down. But my clients my staff works at home, so it wasn't very disruptive. We've been doing that for 20 years, so it wasn't that disruptive for us to be working at home for some of our people. But what happened is, this my staff person, he's down south. He was working out of his house, and he was having some issues. He originally got shingles, and he was suffering from shingles, and he got that probably at the end of November, in December sometime, into January. I guess it was actually in January and February. He had shingles. But he, so he was recovering from that. He was having some problems, wasn't feeling well. But you can't go in to see a doctor because everybody was locked down. Everything was focused on the coronavirus. So about 3 weeks ago, maybe it was 4, it got so bad that he finally got a doctor to see him. And he went in, and he got an appointment for that next week. He went in, and they had diagnosed him with cancer. And they told him, come back in a week. You've got lymphoma. We'll be able to tell you what kind. Come back in a week, and we'll start treatment. So he came back. So what happened is that he went back home. A week later, they canceled the treatment because they didn't give him a reason, but the reason was that he died the next week. So is that a result of the coronavirus? I don't know. Lymphoma, pretty much every, that's a tough one. But, if caught early, maybe. But obviously, in this scenario, there was no treatment. Nobody's going to catch him. So is his death a result of the shutdown? Absolutely. In my opinion, absolutely. Because I think they would have at least had an opportunity to treat. So maybe it would only extended his life a little bit, but maybe not. I mean, I had, one of my employees that, not during this process, but got pancreatic cancer. Usually that you don't come back from that. But it turned out it was on the outside. They were able to treat it, and he survived pancreatic cancer. So, that's one example. I'll give you another example. A friend of mine just ran into him, was talking to him. A friend of his has serious back problems. He needs surgery bad and quickly. He couldn't get in. He can't get in. Elective surgery. They won't let him get in for the back surgery. What happens when you have back pain? Gee, they diagnose some pretty heavy narcotics, right? In fact, talk to any drug addict, and some of them got their medication as a result of a back problem. That used to be the big way that oxycodone made it into the world. Multiple prescriptions, but the initial prescriptions were legitimate. Somebody had a back problem. Now, if you think somebody's out there going to be taking these pills and not get hooked to them because they couldn't get the surgery to repair the back, yeah, that's a problem waiting to happen. Those are all of the kinds of things that are occurring and will occur as a result of what's going on. So anyway, we've kind of got through the whole concept of the fact that a depression can be a good thing, is a good thing because it corrects all of these problems, but is it painful, costly in human life, not just financial costly process. So anyway, we'll talk about next week, if I don't ramble, we'll talk a little bit about the 2 ways that you could get out of a bad economy. One is depression, one is hyperinflation. And we're going to talk about the effects of hyperinflation because I think that is a possibility with this one. So anyway, join me next Wednesday right here on WSTU Digital 1450. We're Martin County's Heritage Station.